Thank you very much. I'm Tilman Ehrbeck with CGAP. We are a global partnership with a common mission to advance financial inclusion for the poor. And as such, we are supporting innovation around the world and provide evidence-based advocacy or advisory to regulators and policymakers. I will use one slide, and I need the forwarding device that's here. I will introduce one slide to introduce both topic and speakers. So we talked yesterday already a lot about mobile money. And there is M-Pesa, of course, as you just saw, but there are also other mobile money deployments around the world. We talked about EasyPaisa in Pakistan, bKash in Bangladesh, other places. What excites many of us in the community is that that ubiquitous retail payment, electronic payment systems do enable other businesses and enable other services to be delivered that help the poor improve their lives. And that's what this panel is about. So the first use case, if you will, or first set of applications is within the financial services space. There's payment aggregation, merchant aggregation businesses, and Dylan Higgins is here from Kopo to talk about that. Once you have electronic payment mechanisms in place, it enables the broader range of financial services, and Awuondo is here, Group Managing Director of Commercial Bank of Africa. And then you can also do other things that go to the real economy. Electronic payments can help with transportation, agriculture, and they can help with energy and water. And we have Nick Hughes here, who is a startup founder of M-KOPA, which provides solar panels. And then, of course, M-Pesa is at the core, and M-Pesa is now spreading outside of Kenya. And we have innocent Ephraim here, who is a project manager with M-Pesa and has been working on bringing the M-Pesa service to Tanzania and now South Africa. Is that correct? So that is the topic and the excitement, and an incredibly distinguished panel to speak about their businesses and their plans for the future and some of the challenges that they might perceive. So the plan for this hour, and I think we pretty much have the full hour, right, Susie? The plan for the hour is to have a bit of a moderated dialogue for the first 25 minutes or so. And then we really want to open it up for a solid half an hour with you all in dialogue, and then we return to the panel for a brief closing. So that's the plan. We start, if that's okay with you gentlemen. I would love to start with Nick. You come back later with M-KOPA, but you also were part of the startup founding team of M-Pesa. When you started, no, not yet. Back to the previous slide, please. Oh, I didn't push the button, but I do have control. Let me go back. I do have control. When you guys started M-Pesa in Kenya, what did you expect could possibly happen? Did you have a picture like this in mind?
Good question. Well, I wish we'd been given capes like your advert. I think things would have been very different today if we'd had capes and underpants we could wear outside our trousers. But actually, no.
More colourful panel.
Yeah, more colourful panel. This is true. So, well, M-Pesa was launched 6.5 years ago, and it's very well analysed and been documented everywhere. But perhaps I'll go back a little bit further to when we first came up with the concept of M-Pesa, and that's going back to 2004, 2005. And I'll be very frank with you. The first platform we built, we actually got very wrong. We were working on the ability of mobile technology to allow financial transactions within the heady environment of microcredit and microfinance. And the first platform we built was designed to work with a microfinance institute and a commercial bank, which was CBA, and the MFI was Faulu. And we were building a platform to allow Faulu to disperse loans and recover payments. And having spent a lot of time and a lot of money building that pilot platform, we watched what customers were actually doing with it, and actually what they were doing was loading more money in than they needed to do a loan repayment. And we looked a little deeper, and it was clear that they were sending each other money. So we probed a little deeper, thought a bit more about the technology, and thought, well, actually, the scalable proposition is a person-to-person money payment platform. So we then spent about nearly a year taking out functionality, repositioning the business case, and focusing in on how we could get to scale quickly. And that's key, and that's where Michael Joseph, the Safaricom CEO at the time, stepped up and said, well, actually, now I understand what this business opportunity is. It needs a separate team, a separate department, a focus on what's going to make this work in the marketplace. And I know there have been various discussions over the last couple of days about that, but it is not just about the technology. The technology has to be good enough and simple enough and low cost, of course, but it's about distribution, about customer care, about how you deal with problems on the ground, how you work out commission structures for your agent locations. And really by focusing in on what the scalable proposition was, suddenly M-Pesa was born under the slogan, send money home. So we didn't talk about microfinance, we didn't talk about mobile banking. It was simply, do you want to move money between A and B? Well, we have a way to do that. Okay. It does raise a broader point about scale. And that's, it's too easy to assume if you get some technology and plug it in, it's going to work. But actually, if you think about a sort of lesson 101 economics of low-income consumers, by default, that means low-income margins, either for a transaction or for a per active customer. As soon as you move into low-income consumers, low-income margins, you need scale. Yeah. And scale is actually quite hard to do well. It means taking costs out. It means getting your boots dirty on the ground, thinking about distribution. It means building customer care services that respond to vast numbers of people. And not just tens of thousands or even hundreds of thousands, but literally to make that a commercially viable entity, you have to be finding ways to get up into the millions of customers to make it work.
So we come back to the scale point, but you are saying the key was keep it simple?
Keep it simple and think about scale.
And then commit to scale. Yeah. Let's move up the rainbow, Dylan. You're a payment aggregator, merchant management company. How do you get to scale? First, what do you do? Kopo is not Swahili, by the way. What does it mean? What do you do?
Kopo is actually a derivation of a word Kobo, which is from a language Creole in West Africa. Our initial pilot was actually in West Africa with a microfinance institution very similar to the original use case for M-Pesa in Kenya. But we have pivoted as well because that business failed for us, and we embraced failure and learned from it. But what we are now, and I think where we've hit something very big, is we are a merchant management solution for mobile money systems, or more specifically, a merchant acquisition platform for mobile money systems. And what that means is we help when a mobile operator, a bank, any payment provider is looking at building a merchant acceptance network, we're there to help them. So we partner with them, and then we get them to scale. To give you an indication of how this has worked in Kenya, when we started with M-Pesa 18 months ago, they had about 100 retail merchants. 18 months later, we're at 10,000 merchants. And by April 2014, the stated goal of Safaricom is to have 100,000 merchants in Kenya. So that's within 2 years, we're going to be building an acceptance network of 100,000 merchants. When we started, there was 100 points of acceptance on the M-Pesa system, and only actually outside of even M-Pesa and in the banking system, there was only 10,000 points of acceptance in the country. So we're scaling up, and it's to Nick's point, it's keeping it brain dead simple. It's really simplifying your business model to respond to a basic merchant pain point and then providing an end-to-end solution around that. But you have to be keeping it brain dead simple. What we did with Safaricom is we pushed for one simple fee, which was 1.5%. It's now 1%. So the merchant rate in Kenya for M-Pesa payments is 1%. There's not a banded tariff structure. It's very simple. And the consumer charge is nil.
Who's your customer in all of this? Is it Safaricom? Is it the merchants? Is it the customers of the merchants?
So we partner upstream with payment providers like M-Pesa, and then we sell our service into merchants.
Now, you are an intermediary there. How sustainable is that? If the technology gets better and the connections have been made, will you be squeezed out?
We won't be squeezed out because this is a complex business, and it's a use case to provide. Payments to us is just a Trojan horse. there are so many things that these merchants need to run their business. We're taking those, actually a statistic that MasterCard uses, which is something like 90% plus of all the world's businesses are run on paper. What we're doing is, this is the on-ramp for millions, hundreds of millions of small businesses through payments, through M-Pesa, for example, into a digital platform. So we will use payments as our first step into a long-term relationship built on trust with our merchants. So we can layer on payments-enabled CRM, we can layer on inventory management, we can layer on POS. There's a number of things that we can do with the merchants that are beyond payments. So we're very much not a payments business, we are a merchant services business.
Well, yesterday, with Sherry Blair and others, we heard the very strong argument that I think we intellectually all embrace. Women are key in poverty alleviation and in financial inclusion. Two questions for you. The first is, in your merchant base, is there a gender dimension? Are there disproportionate women entrepreneurs?
I don't know if there's necessarily a disproportionate number of women entrepreneurs, but I do think that some of our early adopters are female entrepreneurs. For example, we track all of our merchants by the merchant category code, and fashion, boutique, stores are actually an early adopter of an electronic payment method like M-Pesa, and many of those are female entrepreneurs. And so we very much see that in the marketplace, and it's important when you get to scale, you've got to find early adopters, otherwise you can't prove the business case and it's never going to scale. Because we're seeing a lot of early adopters being female entrepreneurs, we also are very design-oriented as a company, so we want to reflect that. We want to mirror the market in our own company, and so we do have, we try our best. We're a payments business. Payments business traditionally are male-dominated, but we are trying our best at building more and more middle management talent locally in Kenya that can help us reach out to those early adopters.
Well, let me double down on that question. So I can't help noticing, and you have noticed, this is an all-male panel. The VC industry is notorious for being testosterone-driven. Do we have a gender problem in the startup space? How does that look for you?
It's put me on the spot, but I don't think we have a gender problem. I think.
Okay,
yes. We have a gender opportunity, is what I was going to say. Yes.
You got at M-Pesa, when you started up, when you are rolling out, where are your female colleagues?
Well, from the early days of M-Pesa, there were a couple of people that really drove it. Somebody, she might even be the audience today, Susie Loney. I mean, she was there doing all the hard work at the coalface. Pauline Vaughan sitting in Safaricom doing all the hard work. So I don't think there is. I think we have a legacy of traditional, especially in the VC community, traditional, the incumbents really have been dominated traditionally. But I certainly don't see that in the marketplace in Kenya. Do you? I mean, there's lots of great startups run by both sexes, and they're getting on with with the real stuff. And I don't think there's an issue.
In Tanzania,
certainly
South Africa,
there's no issue in Tanzania. So, we had real fighters in Tanzania who pushed M-Pesa to the next level. And one of the key projects that have been championed by a woman in Tanzania is a MWEI project, and MWEI stands for M-Pesa Women Empowerment Initiatives, and this is whereby she actually took the project to the Lake region and collected women together, provide them loan through M-Pesa. They did their businesses and pay back through M-Pesa. And that shows a great achievement that we've got on the project through the Women Empowerment Project.
Okay. Yeah. Well, for the records, CGAP is 2/3 female-led, and you saw my colleagues on the first day. Every now and then they trot me out. Isaac, let's move up the innovation rings. And so M. Shavari, runaway success, and I'll click the button for you. Shall I do that?
Yes, please.
Here, no? So we had that, here we go, thank you. Whoever has, I will not touch this again, and we will point to you. Isaac, over to you.
M-Shwari is a very, very simple response to the needs in the market, leveraging a partnership CBA has had with Safaricom and Vodafone since the inception of M-Pesa. The one thing I think which most people don't know is the fact that CBA is a bank which actually stands behind the M-Pesa ecosystem from a financial point of view and giving financial value to e-money. And we've worked in that partnership very successfully for the last 7 years. It was really arising out of that we began asking ourselves about 3 years ago, what do we actually do next? M-Pesa had achieved what we believed was fairly unprecedented in terms of creating a payment ecosystem which relied on a person-to-person tool, the mobile phone. And in various discussions, we decided that there was an opportunity to actually create simple savings products and simple credit products using learnings from some of the mobile credit activities which Safaricom had undertaken. And so we launched it about a year ago in November last year, not really knowing what the outcome would be ultimately. But we had one principal opportunity which was there. The fact that M-Pesa had in excess of 15 million registered users who used it quite intensively. And the partnership we built essentially allows us to bolt a completely mobile-centric banking solution which offers simple savings and simple credit access tools behind it. And essentially a complete bank on your mobile phone, which basically uses the M-Pesa network to facilitate payment, person-to-person payment to whoever you want to pay. And the success for us has been very, amazing. At the end of last month, we crossed the 5 million customer mark, and within the first 11 months of operation. The basic aspects of it, of basic savings and basic credit, appear to be working very well. And what we are looking at the moment is how can we move it beyond basic savings, because when we call it a basic savings tool, it's actually operating like a current account because the duration for holding deposits in that account is lower than what we'd have preferred. So we are now developing products and solutions coming out of surveys and discussions we've had with customers, which will allow us to provide true savings solutions. It's a service which basically allows a customer to save as little as a dime and to borrow up to $1.20.
That bar chart, the font is small. So the bar chart shows your customers from 137,000 to 5 million within a year.
Yes.
How many are savers? How many are borrowers?
The 5 million are all savers because the entry into the service is a savings account, and borrowing is a value-added service, which then gives whichever customer saves the opportunity to basically borrow to meet any emerging cash flow challenges they might have.
And how many so everybody is a saver, how many are borrowers?
So far, we've more than 3 million customers have actually borrowed.
I can't calculate that growth rate. It's very, very high. When you're a regulator and you see that type of growth rates, you get concerned about controls, risk management, etc. What type of dialogue do you have with your regulator?
We involved the regulator from the beginning. The regulator was part of the journey for building this product. And at every step of the development of the product, they were involved in the discussion, they were involved in understanding the risks, and they were involved in testing the product with us into the market. So we believed very, very strongly, as we did when we partnered with Safaricom on M-Pesa, that it was always important to carry the regulator along in whatever you are doing, provided it touched what we consider to be financial services. I think in Kenya we are lucky to have a regulator who was very forward-looking, saw the opportunity, and the opportunity they saw was bringing money which ordinarily would sit and pillows or would be held in cash into the formal financial system. And so, and provided the controls were put in place, they were very, very happy. I mean, we've built a system which is very, very tight in terms of controls, quick, completely paperless, but built in all the controls from both a credit assessment perspective, credit provision perspective, and collection perspective.
Last question for you in this first round. For the competition, this must be a bit scary. Is this deal that you have with M-Pesa, is that an exclusive one, or can and will it be replicated?
I think ultimately you can't make any of these things exclusive. Obviously, we were making a huge investment upfront to be able to test this very, very new approach to banking. And I recall when I went to my board to seek the initial investment, I think the first question they asked me was what I was smoking, because you're putting up 10 million, in excess of $10 million investment for what they didn't see as a potential business. We obviously did the math, and the math looked very interesting, but the proof ultimately is whether you are able to convert the upfront investment you make into a return. From where we sit today, I think that it's probably one of the best decisions we made as an institution. We have a partnership which gives us a 2-year window. So we have a 2-year window up to the end of 2014. Then it will open up to the rest of the market. But it is already opening up to the rest of the market in different ways, because some of the larger retail banks have already begun finding innovative ways of responding to what we've done. So we don't see it basically as a hindrance to innovation in the marketplace.
We might come back to that in the audience question. Let's move up, in the interest of time, the rainbow. M-KOPA, and I think there's a video that Nick wanted to show
sure.
up.
Perhaps just as a couple of words of introduction. So you're going to see a very short video on what M-KOPA is. I mean, go with it for a minute and a half, because this, for me, is about financial inclusion. Many of you know, I'm sure that 80% of sub-Saharan Africans are not connected to the power grid and spend sometimes up to 20% of household income on very poor quality energy, typically kerosene or paraffin or charcoal. So what we've done using M-Pesa as the engine and building a product out called M-KOPA, we can save those customers cash every day by thinking smartly about how we can use mobile technology. The best way, I think, is to show you the video. So if we could play the video, please.
Yeah, these are now my cows. My name is Alex Keitan. I work in Kapanet town. I just as a farmer. The solar panel, I've just put it on the roof. And the wire, then it connects to the control, then to the control box, which is inside the house. So now, when you want to check the credit, just press it here. Then it shows me this 08 days to credit. I opted for installment 40 shillings every day, because when I get some small amount, I can deposit 100 shillings, 200, 300, depending on what I get over the week or even the month. I can even pay 1,000. Yeah, so I find it easy. Then the kitchen, the light is here. It has actually changed my life, because since I bought it, I started using it to light the 3 rooms and even charging. Yeah, and even my neighbors benefit for charging their phones. Since the day I brought the solar, I stopped buying kerosene because I found it affordable. And then the balance is here. M-KOPA has received your payment. Kenya shillings, 150, paid to account, my account now. I find it very easy because wherever I am, not only in town, but wherever I am, I can deposit some amount to M-Pesa and then transfer it to M-KOPA.
Yeah, thanks. I'm sure you get it straight away. It's a simple idea. We put mobile technology inside a device like this, and we allow Alex to buy it at a daily fee that's less than the price of kerosene. So not only are we getting rid of a poor quality fuel and a dangerous fuel in his house, we're making clean technology affordable because I can collect small amounts of money at a very low cost. The payments are completely flexible. When he's got money, he can overpay us, and all that's doing is moving this ownership of this device closer to Alex. So he buys it over 12 months, normally, 12-month period. After that end of that 12-month period, it's permanently on, and then he doesn't pay anything anymore for simple lighting. Actually, we've got about we're just over a year old. We've got about 37,000 customers. Most of them are paying quicker than you'd expect. They're not taking 12 months. They're paying it off in between 9 and 10 months. And the response we've seen has been fantastic. For those of you that are into data, and I know it's come up a few times over the course of the conference, but these things are on in the network. So not only do we see Alex's payments coming in, and we know when he pays and how much he pays and how frequently he pays, we can also go in and see just how much utility value he places on this, because we can go in and look at the performance of the battery, whether his solar panel is in the right place, and how many hours a day he uses it for. Now, think laterally, suddenly I have a piece of collateral in Alex's house around which I'm offering a service, a payment service. We're asset financing this for him. There's nothing now to stop me refinancing this, maybe sending him a little bit of cash back, because I know what utility value he places on a device like this. So it's just one example, I think, of how we can use payments and mobile technology smartly to tackle real issues for consumers on low income.
And in this case, it really made micro-leasing viable, if you will, the asset-based finance.
It's really micro-leasing, yeah.
In the interest of time, Innocent. So Kenya is a special market. Safaricom had a 80% market share as a mobile operator. Higher, lower?
I should correct that, actually. When we launched M-Pesa, we had 62% market share.
62%, okay.
Still big.
Still a big, still a dominant player, and therefore a leg up in the mobile money space when that was rolled out, and the ability to make mistakes, reinvent, etc. As you took the concept to Tanzania and South Africa, what of the Kenyan lessons hold? What's different?
Wow, good question. It's clearly known that there's a huge difference between Kenya and Tanzania, geographically, the way the population is and all that. But I'm glad to have Kenya, because every time we depressed and we don't know what to do, we go to Kenya. We go to Kenya, we get inspired, and then we go back to Tanzania to do it our way. Yeah. So there are number of issues that you need to take into consideration when you launch mobile money, and I always say that agent distribution is the key.
Okay.
And you need to have it visible. You need to make sure that it is available, and you need to make sure that the agent is well trained. Mm-hmm. Because when a customer goes there, he needs full support. He needs to be led to do the transaction. But then all that a provider needs to get keen on is to make sure that the system is stable. Because the only reason that a customer will trust your service is that he can get his money whenever he wants it. And then one of the days I went to Kenya to get that inspiration, I met Kopo. And that makes the next move of mobile money, because the one thing that we couldn't do best is to take care of the merchant space. Mm. And we were very glad to have Kopo in play, and I'm gladly saying that we've moved them over to Tanzania, and they're doing that role that we would have never done. which takes us to the next level that enables us to do business-to-business payment, where we allow merchants to pay suppliers through mobile money. The relationship with banks is quite critical. Everybody is talking about mobile money being a service for the poor. But if you look at the pyramid, the guy on the top of the pyramid has got a relationship with the guy on the bottom of the pyramid. I'll just tell you a story. When I landed to London the other day, I got a call from my mom. And she was like, "Hi, son," and she thought I was in South Africa. Mm-hmm. And I was like, "Sorry, ma'am, I'm just signing in the conference. Can I call you back?" And she's like, "Oh, okay. Unfortunately, I'm out of power." Mm-hmm. And remember, I've been in South Africa for 3 months now. Traditionally, for you to use M-Pesa, you need to visit an agent and deposit. Yeah. And all I did was to go to my bank account, pull money from my bank account to M-Pesa, and then bought prepaid electricity for my mom, and sent her a token. Mm-hmm. And she was on with Light. Mm-hmm. And what I'm trying to say is, as a guy in the top of the pyramid or mid of the pyramid, I could reach my mom who is on the bottom of the pyramid in an instant. Mm-hmm. And the product now becomes not only a product for the guy in the bottom of the pyramid, but the whole pyramid benefits out of it. Mm-hmm. And that's what we've been trying to push.
Did you hear Bcash? And the mother in Bangladesh who said, "Now I get the instant service, but my son doesn't come visit anymore." Is that a problem for you? So far, you don't have to answer. He said, "Ma'am." He said, "Ma'am," to his mother. I will report back at home. So far, similarities. So you said to Kenya, centrality of the cash in, cash out, trust, agent network, relationship with the banks. Any differences in the other markets, things that you do different, either because of market structure or for other reasons? Are you doing things better second time around?
Surely, yes, we do things quite better in other markets. And I actually wanted to call a person from the rural Tanzania to give you a live experience of how they feel it. Unfortunately, probably he's out of power. He couldn't charge his phone. He's not reachable. You've got solutions for him.
Solar energy.
Yeah. So if I went to South Africa, and the market there is quite different. Mm-hmm. The ability to integrate to traditional point of sale is critical, and that is not what M-Pesa was basically designed. We designed it in a way that we give an agent a tool to trade, but in some markets the agent already has a tool. So basically you need to integrate to that tool, and that's the next generation of this platform. Okay. And as much as we push the product to other markets, we look at what other markets need, and we change our systems to integrate into them.
So in the interest of time, this took longer, but that was totally okay. You guys were great. We moved to Q&A and open it up. I see 10:45. Do we have 10:45 or 11? Just let me know. 10:55. Okay, if you could reset that clock accordingly. So we have some 20 minutes, and I do want a closing. So we do 15-minute Q&A, and so please introduce yourself and specify to whom you direct your question. And it's hard to see in the back, so if you guys with the mics could help me distribute the questions a bit. But why don't you go ahead, Bhagwan?
This is Bhagwan Chaudhary. I'm a professor of finance at the University of California, Los Angeles. My question is to you. It's a very simple question. Please don't say it's proprietary knowledge. Please. You said that a customer could make a deposit as low as a dime. If I come and make a deposit of a dime, can you tell me how much does it cost you to make that transaction go? Not what you charge him. You may not charge him, you may cross-subsidize, but what does it cost to make the deposit happen?
Okay, let's collect a few questions, yeah? That allows you to choose and pick as well.
He can answer this in 5 seconds.
Okay, 5 seconds. What transaction cost?
It costs less than a dime.
Less than a dime. Can we specify the range?
I haven't worked it out, but it's
Okay.
very, very cheap. That's why we are
Okay.
not charging for it.
Are you
Yes,
profitable?
We actually broke even, we begin turning it into a profit by the 8th month,
Okay.
and we expect to pay back the investment in 18 months.
And is your revenue model the net interest margin on the 3 million as opposed to whatever is charged?
It's purely net interest margin. We don't charge anything for the transactions.
Okay.
Yes.
More questions from the floor? Okay, so we stay to the left and then we move over to the right. Left back. Ma'am, the mic is coming. Here we go. Please introduce yourself.
My name is Ngozi Eze. I'm from Nigeria. I work for women at the bottom of the pyramid, very illiterate women. And the organization I work for, we work in conflict and post-conflict countries like Rwanda, South Sudan, DRC, Kosovo, Afghanistan, Iraq. My question to either any person, have you been able to map like the illiterate people that are not able to afford your services and what their challenges were? Because for us in Nigeria, because of the lack of infrastructures in the rural communities, it's very difficult for the local women or the very poor woman to kind of hook onto the technology. But in the urban cities, it's working, but it hasn't really gained great momentum. So I want to know whether you have mapped the challenges for the illiterate women. Thank you.
Let's stick to this question first and broaden it a bit, because it was one of the ones that I wanted to ask you all. One of the challenges with technology is it often starts with the better off. And so does it really trickle down? In response to the question, conflict areas, others, whom do you actually reach? I think in the M-KOPA case, it might be most obvious. But if you could tell a little bit, maybe Isaac, you first, then Dylan, whom do you reach and how does it help with economic opportunity, reducing vulnerability for the excluded segments? Okay.
I mean, I think if you take the mobile phone, and I take the mobile phone as being the tool which drives mobile transfers and eventually the banking services. Mobile phone companies have been very, very successful in ensuring that even the person who cannot read is able to use the mobile phone. And I think that if you take it from that level and you drive, you put in the appropriate types of menus within it, which again has been done, especially on the savings and the borrowing side. It is actually proven very, very easy to use. I think that one of the guiding principles of everything we've done in this area is to keep it very, very simple. So simple that it is easy to explain. And once you see it once, it is easy to use it again repeatedly. Now, we do not have any specific information on how many illiterate women or people we might have reached. But what is clear is that based on utilization and penetration levels of the mobile phone and the level at which they are used both for SMSs and for mobile money transfer, that it has reached a very, very large population of people who hitherto could not be reached.
5 million savers and 3 million borrowers, where are they in the segmentation of the Kenyan?
Segmentation currently about 40% are women and
okay.
60% men. And I think if you get the graph provides further details of the demographic distribution at different age groups.
Income levels as well. Are you reaching down?
We're reaching down the bottom of the pyramid. But it's the other interesting thing, and I think it's a point my friend from Tanzania made, is the fact that it is a tool of convenience. And so even people you wouldn't expect to use this service beginning to use it. From some of the analysis we've done, of the 5 million users we have today, from a deposit point of view, more than 200,000 people who we'd expect to be in the normal banking system, but have chosen to use this service.
Dylan, really quickly, for you, are you reaching merchants in more remote areas,
including post-conflict areas like Rwanda? We're operating in Rwanda now. Okay. In Kenya, it's both urban areas, rural areas. I will say that because we are looking to build a profitable, sustainable business, our early adopters tend to be the top of the pyramid. However, we're looking at points of leverage into a larger market. And so I think in many ways, our top of the pyramid merchants are serving the bottom of the pyramid customers. And so that's our way into that larger market.
Okay. Let's take questions from the right-hand side. Okay. Where's the mic? Ma'am, please.
I'm Veena Mankar from Swadharan, India. My question was for the banking services. Obviously, the ecosystem now being there and the number of customers being there allowed the banking services to take off. Do you have a lot of cash-in, cash-out transactions, or are they mostly going from person to person or business to person? And if you have the cash-in, cash-out type of transactions, how is the transaction cost, which I heard is around 1% or 1.5%, looked at by the customers?
The service is very much person to person. So more than 80% of the transactions are people moving money from one individual to the next, very much within a closed loop ecosystem. Now we don't track within the bank the cashing out element because the structure we put in place was for the bank to basically provide the banking end of the solution and the payment side to be handled on our behalf by the mobile phone service provider. So we haven't begun sharing with each other the elements of cashing out of cash by our customers in their ecosystem. But I believe that that is one of the things which is going to naturally develop as we build MIS to enable us better understand what customers are doing as customers of ours on the payment space. But as things stand at the moment, we haven't. So the charge for drawing cash would be borne by the individual as they go to the mobile service provider. And we don't get involved in that at all. Yeah.
Can I build on this question? This notion, this hypothesis that e-money drives cash out of the system. Do you see that borne out in your respective businesses, Nick?
I think eventually it will, but not immediately.
Not yet.
Not immediately.
Okay.
Yes, yeah.
Nick, Dylan? Yeah.
No, not really. I think you're really looking at velocity of money, yeah, not absolute amounts. And I think as customers have got more comfortable with M-Pesa and M-Money generally over the years, you've seen people hold larger amounts in their wallets for longer periods of time. I think that's true. You've also seen a reduction in the size of those transactions and an increase in the frequency. Yeah. So people move into it, but I don't think it's. I think the biggest benefit is just it allows remote payments with immediacy, and that's. Yeah, that's
so
the key.
It lowers the cash management cost for the system because you can net and settle more locally.
Yes.
Okay. Ephraim, any perspective?
Well, I think it's all conveniency. So my dad is 75 now, and when he calls me and asks for money, he doesn't say, please send me money. He says, please M-Pesa me. Mm-hmm. And that just shows how happy and easy they feel the product is serving their needs. And what I learned in my 5 years of product development is we should stop innovating and we should listen to customers. They want it simple because they are not as complicated as we are. And the more you keep it simple for them, the more they use it.
Okay.
Yeah.
We have time for a question in the back.
I'm Ashok Narayan from India. I was working for the Client Protection Group. The use of mobile technology and involving people who are half semi-literate or illiterate, what was the experience in terms of misusing the system or frauds or malfeasance?
Let's take the panel, let all of you answer to this notion of new business model create new risks? How aware are we? What are we doing? Isaac, if you want to go, and then we go down the panel.
That fraud is obviously one of the risks which exist in the system. And one of the things we learned very quickly is that when you introduce something new, there are what I call the early adopters who look at opportunity on everything which comes up in the system. In the 11 months of operating Mshwari, we've had the total level of frauds is about $25,000 for deposits of in excess of $320 million. So it is insignificant from where we sit. And the type of frauds which occurred arose because of some initial design flaws in the system, which we picked up and fixed very, very quickly. So the system is flexible, it's adaptable, and you are able to respond to any challenges you face. So it remains a risk, obviously, and it's a risk which you must manage and you must respond to very, very quickly. But based on the level of deposits we've generated so far and the fraud which have occurred, from where I sit, it's completely insignificant. Yeah.
Dylan, new risks, new answers?
Definitely. So when it comes to merchant payments, there are new risks that we've introduced onto the M-Pesa platform, in particular, reversals. So in the days of P2P, what would happen is you could have what's called a unilateral reversal, where a consumer could reverse the transaction charge. But in the case that we built for Safaricom is a merchant reversal process, whereby when a reversal is requested, we check with the merchant to see if the good was actually provided, and if it was in fact provided, we will stop the reversal request. So this is all around building once new risks are introduced, you need new mitigation strategies, and you need players to provide those mitigation strategies to the partners.
Yeah, sure. Well, if you don't mind, a general point, because I mean, we shouldn't let fear of failure drive the agenda here. When you move money from cash, which is untraceable and untrackable, into e-money, there are many benefits that come with moving money into e-form or digital form. We of course, we need to be cognizant of the risks. We need to do detailed technical risk assessments, and we need to look at transaction sizes and deposit sizes and build a framework. But we shouldn't carry our mental models of risk management into e-money or digital money, because that's going to kill it dead. And we should think more about the upside and just manage those risks appropriately. And I'm actually more hopeful that things can be much more secure and transparent in an e-world than they are in a cash world. Yeah,
fair enough. Susie is standing. The clock is ticking. I need to bring this to a German precision landing. You are all technology-led innovators, so I'll ask you to tweet. If there's one idea that you want the audience, one message that you want the audience to take away, one idea only, in a tweet, 140 characters, I start with you, Ephraim, what would it be?
I would say, keep it simple, think about the customer.
Nick?
Stay relevant, think about the proposition, and prepare for scale. Yes.
Because of the good work of everyone in this room, the next topic will not be around access, it'll be around usage.
Isaac?
We have to move beyond inclusion to empowerment.
Okay.
Keep it simple.
Thank you very much. You were great. Thank you.